If you're someone who is starting this enterprise that's going to be your full-time commitment, go establish an LLC. It's not going to help you on taxes, but what it will do is preserve your personal assets and shield them somewhat from liability. Plaintiffs can come after the business assets, but they can't come after your house. They can't come after your personal bank account. So it gives you some level of asset protection, which is really helpful if this is going to be your full-time ongoing gig.
Welcome to the Marketing Boost Solutions Podcast. Join host Marco Torres, co-founder of marketingboost.com, along with expert guests as they deliver incredible, proven solutions to your marketing challenges in each power-packed episode. Captain Marco has guided thousands of entrepreneurs, growing their sales and marketing through the use of value-add incentives. His Facebook groups are home to more than 84,000 entrepreneurs who are raking in sales with his advice. Get ready to be blown away with game-changing lessons for your business.
Hello, folks. Welcome to another episode of the Marketing Boost Solutions Podcast. Today, I've got a great guest, Grant. Let me get this right. Bledsoe, is that correct?
That's correct.
One more time with it. Make sure I said it right.
You're a perfectionist.
Yeah, man. 5, 4, 3, 2, 1. Welcome to another episode of the Marketing Boost Solutions Podcast. Ladies and gentlemen, today we've got a great guest, Grant Bledsoe. Grant began his career in the financial service industries in about 2007. Prior to that, he founded the Three Oaks. He has been a senior manager and trader in the securities and lending group at Charles Schwab and Company. Beforehand, Grant held positions at both the Smith & Barney and American Express. He's launched his own financial services company. And what year did you do that, Grant?
2014.
2014, and since then he has been helping business owners around the United States and Canada, or at least the United States. Is that correct, Grant?
Correct. Yeah, we don't have any clients in Canada currently.
I'm sorry.
That's right.
Yeah, I'm sorry. So all throughout the United States, helping business owners set up their business properly and their personal finances as well as business. So, Grant, say hello.
Hello. I appreciate you having me on, Marco, and that's a great intro. You're a good hype man.
Oh, yeah. Thank you. Well, listen, your subject today, I'm excited to have you on because one of the challenges or mistakes a lot of business owners make in setting up, getting started is, whether they're setting up as just running it as a personal business or commingling funds and not even setting up an LLC or starting from the get-go there, Grant. What are some of the first steps you recommend to an entrepreneur getting started, how to set up their company to be set up, going on the right direction from day one?
Sure. The biggest, I would say the biggest financial mistake that we see business owners making right out of the gates is having this mindset of, I'm going to focus all my energy on my business. And if my business is successful and I make sales and I have a little bit of money left over after my expenses, if the business is successful, I'm going to be successful financially myself. And that can absolutely be true. And I am a big believer that going down that path and entrepreneurship in general is a wonderful way to build wealth, but that's not going to happen on its own, right? If your business is successful, that's a huge benefit to you. It's a huge lever to build your personal wealth, but your personal wealth is not going to take care of itself. So right out of the gate, if you're out there launching a business, you've done all your planning, you've talked to potential customers, you've got your pro forma financial expectations, all that done. Now you hit the ground running. I think entity selection is really important. If you're someone who is working a full-time job maybe and you have a side gig that you're just kind of tinkering with and starting to build out, I don't think you necessarily need to run out and form a company. You have some filings you might have to submit to your local jurisdiction, like a DBA, so that you can operate under a certain name. But I don't think you necessarily need to run out there and establish an LLC. If you're someone who is taking a larger leap, you're quitting your full-time job, starting this enterprise that's going to be your full-time commitment, that's probably a good reason to go out and form an LLC. usually you want to talk to an attorney about this, right? You can create an LLC the inexpensive way on something like LegalZoom. It will probably be valid in your given state and your given local jurisdiction. I'm not an attorney, so don't quote me on this. But what it's not going to do is customize the operating agreement to your needs, and it's not going to help you comply with that operating agreement over time. So right out of the gate, if you're taking a big leap, this is going to be your full-time commitment. Pay the couple $100 and go establish an LLC. It's not going to help you on taxes. There are some other ways that we can talk about if you'd like to help cut into your tax bill a little bit. But what it will do is preserve your personal assets and shield them somewhat from liability. And an example of that is, let's say you have an organization, you want to go make ice cream cones and sell them out to local ice cream shops or something like that. Well, if your ice cream cones are defective or if they make people sick, you are at some liability risk. And if you have an LLC that all your business operations fall within, then those lawsuits that come, if you're held liable in the court system, plaintiffs can come after the business assets, but they can't come after your house. They can't come after your personal bank account. So it gives you some level of asset protection, which is really helpful if this is going to be your full-time ongoing gig.
That's helpful. Now, tell me about that operating agreement. What mistakes how important do you feel that is, and what should be set up in there, or is that something you expertise in at all?
Yeah, I think this is an area where it's important to talk to an attorney about what your intentions are for the business and what your structure looks like. It's fairly important out of the gate if you're a solo owner. If you have partners, it's really, really important. And the reason is that the operating agreement is going to spell out when you take distributions out of the business, how, who's going to get what happens if there's a dispute, what happens if you have a partner who's married and then they get divorced, what happens if you have a partner who's married and then your partner passes away. Does their stake in the business go to their spouse who you might not want to be partners with? Is this funded with some kind of buy-sell agreement where the operating agreement dictates that you buy out the spouse and then take over their portion of the equity? These things happen all the time in the business world, and understanding what you want your organization to look like and then dictating that in a formal agreement is just super important and is going to save you a lot of headache down the road if you have partners. If it's
Now
just you,
I've made that mistake, and so I
have you?
wanted to talk about or see what you brought in about that, because absolutely that operating agreement is the difference between, well, it's a shame we don't have an operating agreement for our marriages with our spouses and what have you to pre-establish some rules, right?
Prenuptial
And so,
agreements.
yeah. Well, you've got the prenuptial, but even
A
beyond
little
the
stigma
prenuptial,
about those, but
yeah,
they exist.
yeah, but even outside of the prenuptial, just basically like, hey, these are the rules we're going to try to live by, and I'm expecting this from you, you're expecting this from me. If you don't do this, here's what we're going, and we don't do that in relationships, and when we make the mistake of not doing that in business with a properly put together operating agreement by a good attorney, then you are really potentially bringing up some major can of worms down the road when you have partners, um, as to the things that will happen in life, whether it be, as you say, a divorce, a death, arguments between partners, people not holding up their share of the workload yet, expecting the distributions and so on. So good idea to make sure you get that done right.
And one thing I might add there, Marco, is your initial question was, what should you do right out of the gate? A really good first step is just establish a relationship with a local business attorney that you can get to know over time and who can get to know you and your business. Even if you don't have partners and you don't think you need to form an LLC right out of the gate, no problem. You still might want to talk to an attorney about what documents you need to file locally, because stuff will come up over the years, right? And having an established relationship with someone who knows your business and can guide you and tell you about what you don't know and what you don't know is just vitally important down the road.
Well, I also believe strongly that one of the things you need to do in business and in life is begin to create a team of experts that you on your team that you can, as in your network, so to speak, that you can reach out to for expertise on certain areas. So, like you as a financial advisor, you should have your financial advisor on your team, your attorney on your team. It could be your business attorney. Then, if you're doing real estate transactions and what have you, you need to have that real estate attorney and expertise, and so on. So, having that team of people, not trying to say, well, I'm going to just Google it and read what I need to read, and that'll give me enough education to set up my LLC myself, or what have you, and you think you're good when you're not. Um, so tell us more about, or what would you guide folks next in? Okay, so I've decided I am going to have my LLC, or I am business. I started out as a side gig. It's grown. I did get my attorney. I did form a company. I do have a partner. We did have a good operating agreement. I'm starting to see successes, revenues coming in. Um, now about the personal finances and the taxes. Where would you guide us next?
That there's having some kind of plan, some kind of framework for how to handle cash. How are you going to pay yourself? When and how do you take money out of the business? How do you split that up with partners to where you know what you're going to do? Let me put it this way. You should have a plan in place to where you already know what's going to happen with the next $10,000 of revenue. How much are going to go, how much will go to expenses, how much do you distribute, and all those things. And one important part that we kind of skipped over here, Marco, is if you're starting out of the gate, regardless of whether you have partners or not, please go open a bank account in the name of your business. Your tax person is going to say, yeah, just start the business. We can figure out all the expenses and all that stuff later. We'll run it through your personal return. All that is accurate, but you have to keep diligent track of what's a personal expense and what's a business expense. And that's just a headache down the road. If you have a bank account where all the deposits are made into and all of the expenses are paid out of, there's your bookkeeping, there's your accounting right there. It just saves you reporting. It saves you a headache at the end of the year when it comes to reporting. So now let's fast forward. Let's say that your business is going well, you have money coming in. The next part here is we need a little bit of working capital to live in the business. And another way to think about this is an emergency fund for your business. In the financial planning world, having an emergency fund is kind of like financial planning 101. You have a rainy day fund. So if a whole bunch of bad stuff happens all at once, maybe you get laid off from work or your revenues dry up, the car breaks down, the roof caves in, and the stock market crashes all in the same week, you don't want to have to sell your long-term investments at an inconvenient time. Because often what happens is when those bad things happen, they all kind of, they're somewhat correlated and they all tend to happen at the same time, right? And thinking long-term with your investment portfolio, we're trying to buy low and sell much, much higher over multiple decades of compounding. So that's why we want to have a little bit of cash on the sidelines ready for us in case bad things happen. The exact same thing is true with your business. So the question is, well, how much cash do I need to keep and where should I park it? The way that we like to think about this at our company is it should be a function of your monthly core operating expenses. So take a look at your P&L. You should be keeping books at this point. You can do it yourself, maybe through QuickBooks. You can delegate that to a professional. It's not that expensive to do that either. But you should have some reporting mechanism to where you can pull your profit and loss statement on a monthly basis and look at what the revenues are and what the expenses are across a bunch of different accounts. Within your expenses, you should be able to identify the core operating expenses that absolutely need to happen every month for the business to continue to exist. Right? That might not be all the stuff you paid for last month. You might want to, thinking this through, if a bunch of bad things happen, you might be comfortable reducing your marketing budget for a couple of months, for example, and just keeping the lights on by paying rent, paying your staff, paying taxes, and vendors, right? So figure out what your core monthly expenses are and then multiply that by somewhere between 3 and 6. The range that we like to start with is somewhere between 3 and 6 months worth of operating expenses. Now, not everybody is going to fall within that spectrum. For example, my business in financial planning, it's a professional services business. So the chief asset here is my staff and my skills and experience and expertise, right? But if you're in that ice cream cone business and you're manufacturing stuff, that's a much more capital intensive business. It might be unrealistic to keep 3 months worth of cash in the bank. In general, that's a reasonable starting point, though. So shoot for somewhere between 3 and 6 months. So now you're in the position where your sales are going well. You have money coming in. You're paying your expenses. There's money left over at the end of every month. The question that you're really asking is, what do we do with that extra cash every single month? And the answer is, well, have you met your target for your working capital, or have you not? If you have $10,000 in sales and 5,000 of expenses, you have $5,000 left over. And let's say that you need to pay yourself $2,500 a month to live. I'm just throwing these, I'm tossing these out from left field. That $2,500 that's left over, you can either distribute and pay yourself, you can put back into the business, or you can park it in a savings account to build your working capital fund. So if your working capital fund is $15,000 because that's your core operating expenses, keep taking the $2,500 every month, put it in savings until you get back to 15,000. At that point, you've got a substantial amount of cash left over to keep the lights on for 3 months.
Great idea and good point. In other words, it's to make sure you've got that cushion if you need it, so that you don't suddenly out of business, and with some downfall that comes up, you don't have the cash. And now you're either trying to borrow from Peter to pay Paul, or worst case scenario, you're laying people off and you're shutting the doors. So
Yep.
by having the cash flow, that 3 to 6 months on the side, you've got a way to reduce staff, reduce other expenses, but stay open and get through the whatever pandemic or whatever may be coming up next.
That's right. That's right.
That comes out of left field.
And if I could add on that quickly, it sounds like a lot of cash, right? If you're doing $100,000 a month of revenue and you've got, I don't know, $70,000 a month in expenses and you have $30,000 left over, we might be talking about $100,000 just sitting in a bank account. You might look at that and say, that's ridiculous. I should be putting that back into my business. I want to be more aggressive than that. And that's fine. But the whole reason that we care about this is that your business has some kind of value. And that value can be a tremendous driver of your own long-term wealth if you want it to be. But you have to stay in the game and you have to keep the business open. And this is just another shield between viability and bankruptcy. And it just is another way to keep you in the game.
So, what insurance products do you recommend for a business owner? Um, should they be in, what should they be purchasing for their business over and above? We'll talk about their personal life as well. But is there business insurances that you recommend any entrepreneur, solopreneur, or big business be having?
Yeah, the bigger your business gets, the more concerned you are about risk management in general, and the more insurance coverage starts to make sense, I would say. On the smaller end of the spectrum, if you're just getting your LLC together, you're selling your first few $1,000 in revenue, then it doesn't matter as much. The core stuff that you have to have in place, if you're in, like in my world, we have to have errors and omissions insurance. It's a regulatory requirement. That's first and foremost. We have to have workers' compensation insurance because we have employees here. That's required by the state of California as well, right? Outside of that, it really does depend on industry and your specific setup. If you have partners and your operating agreement, like we were talking about earlier, dictates that if one of your partners passes away, that their stake in the business goes to their spouse, but their spouse cannot continue operating and you have to buy them out, well, then that's a pretty good recipe for some life insurance that the business might own, with the insured being your partner, so that if your partner passes away, there's a death benefit that goes directly to the spouse, and that death benefit is used to buy out the deceased partner's share in the business, which goes to the remaining partners. That's a really common kind of insurance, but obviously is unnecessary if you don't have any partners. In terms of risk management, the stuff that typically comes up, the bigger that you get, number one, you start thinking about offering employee benefits, which could be health, group life, disability, that kind of stuff. The other thing that comes up often is most insurers will offer some kind of business owner's policy with a whole bunch of different types of coverage. One of those might be a general liability policy for the business. And so if you have a retail location, or let's say you have like a bar or something like that, you probably want some substantial liability coverage in case somebody is injured, either an employee or a customer on the premises. The other thing that comes up with that often is what's called business overhead insurance. So if something happens to you and you're unable to continue running it, maybe you get in a car wreck and are temporarily disabled, disability insurance is going to replace your personal income that you might be pulling out of the business, but it's not going to cover any of your staff's compensation. And business overhead insurance is one mechanism that you might consider putting in place to where if you're in that situation, the business overhead policy is going to pay out and cover your overhead for a certain amount of time until you can come back to work, which again is another prudent risk management thing to consider as your business grows, because it can keep you in the game if this thing ever happens. So those are a few that come to mind, but that's an area that really does depend on your interest, industry, and size and scope of what you're trying to accomplish.
So moving on to taxes, there's when you take out the revenue, you're looking at your personal taxes. Give us some guidance in there. How do we set up so that we're paying the least amount of taxes that we ought to be paying?
Sure, I'll give you a couple strategies here right off the bat. One of them has to do with how you take money out of the business. So let's say that your business is a pass-through entity. And what that means is that it's either a sole proprietorship or a partnership. Maybe you started the business and you haven't formally done anything. That means that it's a sole proprietorship. Maybe you've organized an LLC. That's a pass-through business. Or an S corporation is also a pass-through business. What that means is that all the profits left over at the end of the year, you're responsible for paying tax on your personal tax return. So let's use an example here. Let's say that you have $200,000 of revenue and $100,000 of expenses in any given year, and you're an LLC. That means that you have $100,000 of net profits. And if you don't have any partners, it's a single member LLC, and all your revenues and all your expenses are going to be reported on your personal Schedule C on your own tax return. So that means that the $100,000 left over, you're paying tax on, you're paying the income tax on, and you're paying the self-employment tax on. So our tax brackets in the United States vary based on your income level. Let's say that you're in the 24% bracket in that year. That means that of the $100,000, you pay $24,000 of income tax to the IRS. On top of that, you pay the 15.3% self-employment tax. Anything that passes through your Schedule C, you pay the self-employment tax on, so $15,300. The self-employment tax is your contribution to Social Security and Medicare. So in example one, you have $100,000 of profits. You take the money out of the business account or you put it in your personal account. It doesn't matter. Either way, you're paying the same amount of tax. So don't feel like throughout the year you need to you're going to incur additional taxation by taking a little bit out of the business and paying yourself. You're paying tax on it either way, so it doesn't matter. One alternative here that will save you some money on taxes is to consider an S corporation instead. And you can either formally reorganize your business as an S corporation, or you can file a form with the IRS or have your tax person do it that says your LLC is going to remain an LLC but file taxes as an S corporation. What that means is that when you have an S corporation, you have to pay yourself W-2 wages relative to your efforts in the business. Anything that falls to the bottom line, then you distribute back to yourself in a different manner. And I apologize if this is too technical. I'll bring it back here
No,
shortly.
no. This is good. So
So,
yeah, you pay yourself like you would if you worked for somebody else. You're paying yourself, the
yep,
employee. So you're
you're
going to
an
save on that personal income. What was that? The personal taxes that you were referring to.
Yep. So here's why it's beneficial. Let's say that of the $100,000 you have left, right? 200,000 of revenue, 100,000 of expenses. You have 100,000 that you're going to pay tax on. If you're an S corporation, that you have to take some of that 100 grand out as W-2 wages. So now you're paying yourself like an employee. Let's say that you take half of it out as W-2 wages, 50,000 bucks. Well, when you do that, the $50,000 of W-2 wages is assessed the payroll tax at the corporate level, which is 7.65%. So the business pays 7.65% of 50 grand, excuse me, when you pay yourself the 50,000. And you as the employee and recipient of the 50 grand pay FICA and FUTA tax, which is also 7.65%. So what's 7.65 plus 7.65? 15.3%, the exact same amount as the self-employment tax, okay? So the 50,000 you take out as W-2 wages is assessed to the same 15.3% Social Security and Medicare tax, but the other 50,000 that falls to the bottom line, okay, you have 200,000 of revenue, 100,000 of expenses, and another 50,000 of W-2 wages, you have 50 grand left over now. That 50,000, you continue to pay the 24% income tax on, but you don't pay anything towards Social Security or Medicare. So you save 15.3% multiplied by 50 grand by simply filing taxes as an S corporation. And so this whole maneuver starts to make
And
a lot of sense.
that's even if you distributed that to yourself.
It doesn't matter whether you distribute it to yourself or not, because let's say that you don't distribute it, you leave the 50 grand left over in the company bank account. An S corporation is still a pass-through entity. The corporation files its own return. It gives you as the owner of that company what's called a K-1, which is basically like a business owner 1099. And you have to pay tax on your personal return on that 50 grand left over. Now, alternatively, let's say that you take the $50,000 out and pay yourself. Well, the corporation still had that same 50,000 bucks in profit, shows up on the corporate return. They issue you as the owner of the corporation a $50,000 K-1, and you still pay the same level of tax. So it doesn't matter when the money actually comes out of the account, you're paying tax on it either way. The key is structuring it in a way that will potentially minimize your tax liability. And this whole filing as an S corporation maneuver starts to make a whole lot of sense once you're making more than 100 grand a year yourself in self-employment income.
Absolutely. Cool.
So there's a lot of things involved, right? Your decision of filing as an S corp or becoming an S corporation should not be driven entirely by tax planning. You might have other issues in your partnership or your business that you need to consider. There might be legal issues that you need to consider. It all comes down to, what are you trying to accomplish here? What are you trying to accomplish in your career and your life personally? And does this decision align with it? I promised you a second strategy here, and I think it is not going to be quite as technical, but stop me if I go off the rails. It is a thing in states that impose a personal income tax, and it's called the SALT deduction workaround. SALT is an acronym for state and local taxes. And what that means is on your personal tax return, you can itemize deductions or you can take the standard deduction. And the common itemized deductions are your mortgage interest and charitable gifts and state and local taxes that you pay. And when Trump passed his tax reforms back in 2017 that became effective in 2018, it changed that a little bit. I live in California. and I pay about 10% in state income tax every year. So if I make $300,000, I'm paying 10% of that to the state of California, or 30 grand. I used to be able to deduct all that 30 grand on my federal return. But now, because of Trump's tax changes, that deduction has been limited to $10,000. So that's $20,000 of deductions that just kind of went out the window. And if you're in the 24% bracket, that's a difference of $20,000 times 24%, or $4,800. So that change alone cost me $4,800 a year if I'm making 300 grand. Follow me so far?
Yep.
This workaround works if you own a pass-through business in a state that has passed certain legislation, and most states that have an income tax have at this point, and you're paying that state income tax and running up against the limit. The way it works is your business proactively pays tax to the state throughout the year. And then you, as the owner of that proactive expense, get a credit on your personal return. And logistically, really what it comes out as, if my business is providing me $300,000 in self-employment income, I can have the business pay the state of California 30 grand throughout the year as an eligible business deduction, which brings my own compensation down to 270, right? Now at the end of the year, I get a credit for that 30 on my personal return. And instead of paying tax on $290,000 of income, because of that $10,000 limit where we lose the other 20, now I've effectively reduced my taxable income to 270 by just paying it proactively through the business. Now, the protocols for this are a little bit different state to state. And this is something where don't worry about the details. Just go ask your tax person about it, because they'll be able to guide you in your personal situation. But we had a client last year sell their business. They had a couple partners, and I think their share was worth maybe $2 or $3 million. They did this through their corporation, and being the year of their sale, it saved all the partners about 200 grand in federal taxes, because they were able to capture the whole deduction, and it just worked out great.
Wow. And that only happens if you're soliciting support from somebody like yourself to kind of guide you through all these hoops and loops.
It can be a worthy investment if you find
Yeah.
somebody that works well for you.
Cool. This is powerful stuff, Grant. Tell us, give us more. Continue with more, ideas on whether it be taxes, or unless maybe you want to move into the subject of setting up your personal wealth system.
Sure. What's next? Qualified plans are talking a good part of tax planning as well. So let's fast forward a couple of years. Business is still going well. You have the right entity structure set up. You have the right personal compensation structure set up. You're taking cash out in an organized way that aligns with your overall tax strategy and so forth. Well, you might continue having more and more money come in. And that's a great position to be in. It gives you the option. You can put it back into your business if you want, and accelerate growth. Perhaps you could staff up or buy equipment or whatever. The ideas of what to do with the next 100 grand are usually not very hard to come up with, right? People kind of know what they want to do with the money in advance of when it comes in. But one thing I will say is, a lot of listeners are probably familiar with the statistics of business sales. And I think it's around 80% of businesses in the US are never going to sell. And I not to steer people in one way or another, but we have to be cognizant of that, and cognizant of the fact that if and when you do sell your business, you're probably not going to get exactly what you think it's worth. And for that reason, it just makes a whole lot of sense to think about investing outside of your business as well, so that you don't put all your eggs in the basket of, I'm going to grow and operate this thing, and then I'm going to sell it for 10 million bucks years down the road, and I'm going to be rich and go buy a boat or something like that. Don't put all your eggs in that basket. At least put something aside in a diversified and organized way. And the beauty of that is you don't necessarily have to take cash out of the business to do that. You can set up a 401k plan, or even like a SEP or a simple IRA, or there are, about a dozen different options of what are called qualified retirement plans that you can set up as a benefit to yourself and your employees. And it's great for attracting and retaining employees. And it's also very personally beneficial, because anything that you or the business puts into the plan is generally deductible. And if you have more cash coming in than you really need for your business objectives, this is a great lever to pull, because you can structure the thing however you want. Obviously, there are rules and limits to all this, but it's a great tax deduction. You put money, you hire some professionals to set up the account in a certain way, in a way that aligns with everything else you're trying to accomplish. You and your employees put money into it. You invest the funds, hopefully in a diversified and thoughtful way. It's a deduction, and then the value of those funds grow and compound over time. It's retirement planning 101, but is an avenue that I think is often overlooked. And we can go further into the details there if you like, or we can kind of keep it surface level. There are a lot of options and a lot of ways to customize it.
I'm going to go take a moment here and take a break to hear from our sponsor, Marketing Boost, and we'll be right back. Hang on.
It's time to wow, surprise, and impress your clients with the most powerful customer draw card available anywhere. The Marketing Boost Solutions Show is brought to you by Marketing Boost, where you can get valuable travel and restaurant incentives to drive your leads from prospects to paying customers. Now you can offer complimentary hotel stays in over 130 destinations worldwide. Go to marketingboostsolutions.com and try it for free right now.
Welcome back to the Marketing Boost Solutions podcast. You just heard from Marketing Boost. Learn how to wow, surprise, and delight your clients with travel incentives from Marketing Boost to grow your business. Everything from lead generation ideas, trade show giveaways, sweepstakes, contests, all kinds of ideas. You can use these complimentary hotel stays to acquire more clients. As a matter of fact, financial planners, we have a number of financial planners that use Marketing Boost. Since we're talking to Grant, the financial planner and business expert here, we have a lot of people that are out there using the travel incentives of Marketing Boost, taking their sales hat off here and helping support local nonprofits. They're, support local nonprofits with, fundraising events and what have you, rub shoulders with the philanthropists at these events, and kind of by accident are acquiring leads and opportunities to brand themselves as the authority and the expert. So if you're in any kind of industry, insurance, realtors, etc., you could be using Marketing Boost incentives to acquire clients by supporting nonprofits, by giving first, leading by giving. So back to Grant here. Let's talk more about how to properly set up, your financial well, how would Grant take it away? Continue to. I'm at a loss for words here. So I'm taking notes with you over here and going, wow, lots of powerful information.
I hope that doesn't mean it's been too confusing. Try to go the 30,000 feet with sufficient details. So tell me if we're too high or too low there.
No, not at all. I mean, for me, it might be too high, but I'm just kidding. But I'm sure many of our audience out there are beyond this, are definitely getting advantage or learning something from this conversation. Let's take a look at your website. Let me show people where they can get a hold of you. I think I've got you right up here, all about you and your partners here or your colleagues here. Let's get back to your homepage. They can find you here at threeoakswealth.com. Is that correct?
That's correct. Yeah.
threeoakswealth.com, financial planning for business owners. And guide us here. Where should we go if someone's looking to find out more about properly setting up their planning for their business? Where would you guide them first, and where can they learn some more about you here on this site?
I would check out resources there in the navigation bar. In the resources, we have a blog, we have a podcast that I publish every single week. We've got a bunch of ebooks on that cover issues that we just talk to people about over and over and over again. And some of the very issues that we talked about today, cash flow management, when and how to take cash out of your business, some basic tax planning ideas and concepts. And those are all available for free. Some of them you add your name and email address, like we're looking at right now, and we'll add you to our email list. But none of it comes at any cost. And if you want if you really want the guide, we have more behind that as well. So people on our email list, if you're already on the list, you probably know we do webinars and online events once or twice a month as well on top of this stuff. So you hear about all that through our social media and our email distributions.
Powerful, powerful. I'm looking at this here, the five-step retirement income plan, the 4 easy ways for business owners to save money on taxes. So we talked about a couple of them. Why don't we go ahead and on this subject, what would be a couple of the other ways to save on business taxes?
There are a whole ton of them. And to be honest, it's been a couple years since I wrote that document right there. I can't remember off the top of my head which four we chose, but
No
a couple
worries, no
others
worries.
that come to mind are, and this coincides with really our higher level conversation today, Marco. The value, your business has value, and what you choose to do with it over time is a personal decision, but you have a great opportunity to align that value with whatever it is that you want to do financially, your personal and family values. And there are just a lot of things that you can do within the business that aligns with your personal life. And things like thinking long term about your own succession become more and more important the larger that your business grows. And so one way to save a whole lot of money on taxes down the road is to think with the end in mind. If your objective is to take the next 10 years, build up your business to a certain value, and then sell it and walk away with $10 million after taxes, well, there are deliberate things that you want to do in the structure and along that path to minimize the tax hit when you get there. And there are a lot of unknowns in this world, but there is just endless opportunity to optimize with regard to your personal vision. It's not quite as specific of an example here. I'm being intentionally vague.
Reach out to you for more if that's you.
Yeah.
This has been awesome. Appreciate it. So, what other words of wisdom would you have for us here? I'm leading it to you because you are the expert here.
I am passionate about what I do and who we serve because I think entrepreneurship is and capitalism is just a beautiful system. And I not to get political, I think we do have some issues with wealth inequality in our country, and that's a problem. But I also think that entrepreneurship is your best opportunity to make a dent in the world that we live in. And it's just a beautiful system. If you're thinking about starting a business or you already have, you have an idea for a product or service that you want to offer to the marketplace. And it's probably a little bit different than anything else out there that currently exists, right? You don't have to be starting some, innovative tech company dealing in, new applications of AI. It could be a dry cleaning company on the corner, but there's not another dry cleaner for a couple mile radius. And so that you think that gives you a competitive advantage, right? But regardless of what it is, you're offering something to the market that doesn't exist. And you take a big risk, you save money, you risk your capital and your time, and you take risks to offer this to a new set of potential customers. And if you're successful and you're right, then it's mutually beneficial for your clientele and for yourself because your customers have something that's a little bit more valuable than what was offered to the marketplace in the past. They're a little bit better off, and it's economically beneficial to you personally to take that risk. That's just a beautiful system, and it's a wonderful thing to be able to engage in. And I am just happy to be a small cog in the system that enables this kind of thing. And that's really why I'm passionate about it, and why we really exist to support business owners and entrepreneurs in their own journey, because there's a lot of opportunities to structure things in a way that are most beneficial for you. There are a lot of ways to screw it up, and um, that's number one, a nice business model for us, but number two, just really rewarding to be along for the ride for all these people's journey.
So first steps to follow you would be to go to your Oaks Wealth. Let me find that page one more time, make sure I got it right. 3oakswealth.com, and start looking at some of these free downloads, free information here on setting up your business properly to create the wealth and do it right. This has been an informative conversation. I really appreciate it. And I especially like the way you point out, servicing entrepreneurs. That's what Marketing Boost has always been about as well. Uh, I've one of the things I love about this country overall is we're probably one of the best countries in the world to be an entrepreneur in, and the freedoms that are allowed us to, and the tax credits designed to support entrepreneurship versus having a job. It's designed for you to that's the American dream, right? Is have set up a business, set up ways to have tax deductions, and uh, find yourself. How is it? Let me ask you this question. You always hear, you hear people talk about how the rich don't pay their fair share, uh, the et cetera. So, what is your belief on that? How do they go about setting up with, people claim the rich don't pay any taxes at all or what have you, which obviously is not necessarily true. But tell me about, what are your thoughts on that?
Yeah, I would guess you and I probably agree, Marco. Don't let me put words in your mouth. That this whole argument that billionaires should not exist, I think that is complete BS. To avoid swearing on your show, I think that is an incredibly short-sighted opinion and viewpoint. The people that are in that position, by and large, did not fall into it. There are a few people who out there who fell into it because they were born into an incredibly wealthy family. The vast majority of people with that amount of money took risks and earned it, and created jobs for thousands and thousands of people across the country doing innovative things that didn't exist before they took that risk. That's not quite the argument that billionaires don't pay their fair share in taxes. There are a lot of favorable loopholes to really, really wealthy people. And the wealthy people have a lot of power to influence lobbyists and influence the tax code in their favor. I think that there are some loopholes that should probably be closed for people who are in that position, but I don't fault Elon Musk or Jeff Bezos or any other billionaire for taking advantage of the system that exists before them. Some
That,
examples here are, minimizing their estate tax, putting some of their assets in irrevocable trust, getting them out of their estate before they grow too much in size, so that when they die, their estate doesn't pay as much tax. Another example of that is Amazon hasn't paid very much corporate income tax for decades because they take all their earnings and they reinvest it back into the business. Well, those are two different things. The use of irrevocable trust to minimize estate taxes, yeah, I can get on board with that, but it's not quite as what's the right word? I don't know, forthright maybe, as Amazon taking all their profits and reinvesting it back into the company. They don't pay any taxes because there haven't been earnings. Every dollar of profits being put back into the company, that's a dollar of risk that they're
that they're
taking,
that
right?
absolutely. And
This is
people,
risk behavior that's
yeah,
the
that
fuel of their success.
exactly. And that's one thing, that's one area where we do agree that the billionaires that are in that scenario, like Elon Musk and like Jeff Bezos, Amazon in particular. I mean, it's entrepreneurs like that. It's the risk takers that create employment, and the employments are the ones that pay the taxes. So in other words, the risk taker, without the risk taker, I mean, the government can't produce. It's been proven, right? Socialism all over the world. The government can't create the innovative jobs that continue to create society's growth and demands. So the government is never the solution. It has to manage the solutions, but it's not it's not the end all solution. That's for sure.
Right.
So yeah, I agree. And the only way to reward entrepreneur risk is to essentially, that's what I believe. I believe the government role is to partner with entrepreneurs to allow them to benefit from the tax benefits as an entrepreneur, because you're the risk taker. You are hopefully employing more than yourself. But even if you're only employing yourself, well, you're doing that. You're employing yourself. You're paying the taxes on self-employment, etc., and you are creating value to your local community, to your clients, etc. And if you grow into the position where you're employing a bunch of people, then that is the role of the entrepreneur relationship with government, in my opinion. So, and especially when you grow into those huge corporations where, like you say, they may not be paying taxes, but if they're not, it's because they're reinvesting and they're creating more opportunity, more jobs, more innovation, more investments. And that continues to support a lot of other people in the mix.
Mm-hmm.
Grant, it's been a pleasure to talk to you. I think we've been coming up on an hour here, folks. If you're listening and like the content that we've provided today, please like, subscribe, and share this with others. Don't forget to like, subscribe, and share. Tell others about Marketing Boost Solutions. Check out automationbooster.com. We're going to take a break and hear from Automation Booster, and we'll be right back.
Is your business on autopilot yet? Do you have automation in place to capture, nurture, and convert prospects into clients via email, SMS, ringless voicemails, appointment setting? Get all the inbound and outbound marketing tools in one place. Go to marketingboostsolutions.com for more on automating your business so you can make money while you sleep.
Welcome back one more time to the Marketing Boost Solutions podcast. We've been talking about tax preparation and financial wealth with Grant. Grant, let's go ahead and pull up your website again. Tell us where people can find you, follow you, and learn more about your services.
Yeah, check out 3oakswealth.com. It's our website. We've got a ton of blog posts and podcast episodes and white papers you can download, stuff you can download. We're on social media, of course, too. We've got a YouTube channel and a LinkedIn page where we publish pretty much everything that goes out. So wherever you exist online, we probably exist as well.
Cool. It's been a great pleasure to talk to you, pick up some ideas, and I recommend everybody follow through. Check out the Financial Planning for Business Owners YouTube channel. Check him out on LinkedIn here. Let's see if I can find your LinkedIn page. And here he is. Guys, it's been a pleasure to talk to you, sir. And thank you, folks, for paying attention to the Marketing Boost Solutions podcast. Please like, share, subscribe, and comment below. Thank you very much.
Thanks for listening to another episode of Marketing Boost Solutions podcast with your hosts, Captain Marco Torres. Now it's on you. Take the next step now. Go to marketingboostsolutions.com for more on how you can wow, delight, and surprise your clients with the most amazing draw card on the planet. So stay thirsty, my friends. Stay thirsty for knowledge. See you next time.